Welcome to the platform for investor education. In this clip, I want to talk to you about approaches to investing. The notion of investing is really the notion of investing some time and effort in some activity in the hope of generating something that is more valuable. For instance, you could be investing in education, going to school or college to acquire some knowledge that will hopefully get you a better job. You could invest in land or in real estate and hope that as property values rise, your wealth increases. You could also directly go into financial markets and participate in investing in gold and fixed deposits that pay you interest in the hope that you will increase your wealth. It could be in starting a business or in using your skills to supply services as a business. It could also be in investing in businesses that are already started up, or even in more mature ones whose shares are already available and in existence. Whichever of these options that you take, if the business prospers, your investment generates some returns for you. However, you should always be aware that no matter which of these enterprises you start, there are risks involved, perhaps more in some than in others. In contrast to investing, the notion of trading is when you buy or make something and sell it in a relatively shorter time and hopefully at a profit. People have been trading things around the world for centuries. In fact, even before money was invented, there were things called barter markets. People would exchange one item produced in exchange for another. This has been going on for much longer than share markets have been in existence. Trading without having an edge is like playing in a casino. Remember, in the casino, the house always wins. The platform for investor education, which this video introduces, shows you about stocks, bonds, and financial assets, and how you might invest in them. Of course, our hope is that watching our content will enable you to become a better investor. Smart investing is about prudently putting your money to work. It is not about making money quickly. In fact, the people who make the money quickly probably lose it just as quickly. They just don't tell you when they lost it. They only tell you when they make it. Sometimes I think that the guys who write books on how to make money quickly, even as they are making the money, it is by revenues from book sales, not by making trading decisions in financial markets. It is about prudently managing your money. It is about taking long-term positions. It is about knowing what the risks are, knowing what the market conditions are, and trying to evaluate the quality of your investments within those conditions. Think long-term, diversify across sectors, balance risks and rewards, consider spreading out across geographies. There are many prescriptions for approaching investing. Moreover, it is very difficult to time the market. Trading frequently doesn't necessarily result in large amounts of wealth creation. As an alternative to diversification, some investors put all their eggs in one basket and watch that basket very carefully. This strategy of investing money in the stocks of a few market-leading companies have also led to the accumulation of great wealth. No matter where on the planet you look, lack of trust in finance and lack of trust in financial markets has been visible throughout our history. I'm reminded of a quote from 1688, some of the lines of which I'd like to share with you. It talks about finance as being one of the noblest and the most infamous in Europe. It talks of finance as being the finest and the most vulgar of all activities. It talks of markets as being a touchstone for the intelligent and a tombstone for the audacious. Where all of these trying to sort of get you to see is that markets, their success and their failure are intertwined. For every success story in financial markets, there is a story of a scam artist who has made money by doing something illegal. You can think of Bernie Madoff in the United States, or you can think of Ketan Parekh, Harshit Mehta, and Nirav Modi in India. Scams and trust are the things that really preclude many of us from participating in financial markets. I happen to believe that here in India, this is particularly more severe because we are fed this diet of scams all the time that keeps us stuck in fixed deposits and gold, which may not be the best returning investments in the long run. The tulip bubble in Holland, where, for a time, tulips were priced more than 12 acres of land was priced at, the 2007 real estate bubble in the United States, the recent cryptocurrency bubble. All over the world, individuals tend to be underinvested. In countries like India, people are not just underinvested. Even when they are invested, they are underdiversified. Although the recent growth in SIPs, systematic investment plans, is encouraging. Some people take courses at colleges and universities to learn about investing. Investment banks and mutual fund companies also have numerous efforts underway to educate potential investors on equity markets, stocks and shares. However, it is hard to imagine that the latter are taken very seriously by an untrusting population. There are also any number of videos available on social media. Anybody who has made money trading or investing tells you how easy it is. Our platform is different. It is product neutral. Our platform is demand driven. Learners choose what they want to learn on our platform. Some are very safety conscious, others look for guaranteed returns, still others are interested in wealth creation and formation. Some players in markets trade within a day, over 3 to 4 days, some have a 5-6 month horizon, and others look at much more longer term investment. The same person might even have different time frames for different portions of their money, if they are fortunate enough to have enough. Some investors begin to enjoy the detection work involved in analyzing companies, looking for clues that point to the success or failure of their investments. Other people cannot be bothered to do this kind of homework and instead choose to outsource their savings to a mutual fund or wealth manager. In this video, as in many other video clips that you will be seeing in our platform for investment education, we will continuously be talking about risk management, risk containment, risk mitigation. It is perhaps one of the single most important elements as you continue on your investment journey. Another way to think about it is in terms of checking the temperature of financial markets. Sometimes the water may be just a little too hot. Sometimes the water may be just a little too cold. Sometimes the water may be just right. The temperature of the water may be just right. Investors look for environments, economic climates, market conditions where the water temperature is just right, because that kind of creates a Goldilocks environment in which investors can operate. I hope you enjoyed the content and even learned from some of the content in this video and the others on our platform for investor education. I hope that you will continue to explore our site and look at all the content that we develop for you. Thank you.